morning. Welcome to IG's early morning call. It's Tuesday, 28th of March. Let's take a look at the headlines as you wait what looks like a mixed start across the European markets. We're following what's been going on in the Australian economy today, and the expectations are now amongst economists that we could well have seen the end of interest rate rises in Australia, with retail sales slowing down, but nonetheless coming through a little better than expected. Now, could Boots, the chemist, be up on the sale block again? We've got Walgreens Boots Alliance earnings a little bit later on this morning, and also taking a look at oil prices on the way up amongst Chinese demand and amongst some of the headlines we got coming through, which has driven a higher price for oil. Let's take a look at volatility. Significantly, yesterday we dropped below the 22.5 level, which was the low that we saw here. You can see a number of touches very close to this level, this line across here. I've got that on here because of the drop that we saw down to the 2nd of February, 2nd December last year. And you can see yesterday we saw a candle close below that level, and indeed a red candle there as well today. I was talking about this the other day, just to pick up on the downside for momentum. It seems to be bearing out now that we got this momentum drive lower. How much lower it goes remains to be seen. We got some support just below where we are on the green line here, which is the 50-period moving average, kicking in at 21.76, so 22.35 is where we are there at the moment. And that means that money is going into some of these markets. We've now got a rise expected at the start here in the London markets. You can see after yesterday's real positive rise, using that red line as a springboard for the gains that we saw yesterday, that 200-day moving average. Building on that today, we've seen a number of companies coming through with some earnings. I'll go through some of those in just a few moments' time. None of those on the list today are in the FTSE 100 area. They're all sort of mid-cap companies, but nonetheless, a rise at the start expected at 75.22 here in the London markets at the top of the hour. And it's the same sort of price section in the German and French markets as well, rising on from the gains that we saw yesterday with a clear rise as at the close in the 24-hour markets yesterday on the German DAX, and building on that at 15,215. And it's pretty much the same across the European markets. We're up 1/3% on the 24-hour markets in France as well at 71.37. Are we through the woods? Well, not absolutely, but nonetheless, yesterday's rise for Deutsche Bank, I think, was a good enough reasons amongst the good enough reasons to buy back into that sector. And that's partially what's been driving the markets over the last 24 hours. Let's take a look at what's been happening over in the Asia-Pacific markets. The Hang Seng Stock Index in amongst the better performers in the session in today's trade, offsetting some of the weakness that we saw yesterday, which was an outstanding weakness amongst the Asia-Pacific markets in yesterday's trade. A rise in excess of 1% as well at the close on the Australian markets, and gains as well on the Nikkei, but by a smaller margin. Yesterday's Wall Street close, first time in a while, we've seen a loss for the Nasdaq at the expense of the other markets, where we saw gains for the Dow and the S&P 500. The Nasdaq has been one of the better performing markets that we've seen recently. And if you look at the chart, you can see as of yesterday's high point, we weren't quite at the highs we've seen in the last couple of weeks or so, but nonetheless, that market driving up, and then all of a sudden things turned around a little bit. Just a small retracement in what has otherwise been a really big rally, relatively speaking, for this technology market. In fact, from the lows that we saw back on the 13th of March to the intraday highs that we've seen in the last few days, up over 10.5%. So this, as I said, just a small retracement in that move that we've got there underway. I will just show you what's happening on the Dow as well, where we saw that market rise yesterday. And significantly, possibly, I've got this line on here, which was the low we had back on the 1st of March. We didn't quite close above that yesterday. We are trading above it at the moment today at 32,593. So like the European markets, we've got money going in to indices as we see things there stand at the moment. Australian retail sales rose by a margin of 0.2% in February compared to a revised 1.8% rise in January. Now, this number out today beat the median expectations on a survey by Refinitiv of economists. Year-on-year retail sales rose 6.4%, with inflation at 7.4% in January in the country. This means that retail sales volumes are contracting against price increases. Now, this would support the case for a Reserve Bank of Australia rate pause in the month of April. Now, this is being discussed by some economists at the moment. The market now awaiting tomorrow's monthly CPI indicator, consumer prices forecast to ease to an annual rate of 7.1% in February. So, is the balance of opinion now that when the RBA next meets, it will stay on hold? The chief of the Reserve Bank of Australia, Philip Lowe, has said the central bank was closer to pausing its rate increases. You can see here we've got money going into the Aussie at the expense of the US dollar at 66.87. Now, the RBA has already lifted rates by 350 basis points to an 11-year peak of 3.6%. For the RBA governor's monetary policy is now restrictive, which suggests a pause could come as soon as its April meeting. April the 4th is the next meeting from the Reserve Bank of Australia. Now, a few macroeconomic indicators to come out in the States today. Just a quick run through of what we've got there before we take a look at the euro-dollar trade. Wholesale inventories, goods trades balance at 1:30 p.m. today. Half an hour later, we get home prices from Case Shiller, S&P Case Shiller, out with its figures. And at 3 o'clock this afternoon, the Consumer Board consumer confidence number. Not anything there, I don't think, that's necessarily going to twist the markets too much. This is the euro-dollar trade, second day in a row of gains. We've got for euro-dollar at 108.15. If you're long on this going into the numbers today, your stop goes below the 107 level with a view to taking it higher. But it's not necessarily going to be the case, I don't think, unless there is exceptional softness in some of these figures that we've got in the US expected today, in which case there's another excuse. I think we need to sell down this US dollar basket down for a second day in a row at 102.26. Not quite as low as we saw on Thursday last week, where we saw that market hit levels not seen since the 3rd of February. But nonetheless, this is, you can see a trend. It's like a little sort of staircase going on here. So again, like long euro against the dollar, you'd be short on dollars against that basket of currencies. So that's where things are there at the moment. Now, I want to switch gears and take a look at what's happening in other areas of the market, because we've seen some interesting numbers coming out today from some FTSE 250 listed companies. Bellway is one of them. First half earnings at the house builder. Revenue was up 1.6% to £1.8 billion. Now, this is a record level for the group. Underlying profit before taxation, though, was down around about 5% to £312.1 million. 1.6% increase in the overall average selling price, but inflation's at 10%. So the company's having to absorb a lot of the input costs, the increase in input costs that we've seen. I mean, I was talking to someone the other day just about the cost of a brick. It's amazing actually how it all mounts up. And between this time now where we are and this time last year, a cost of a brick is between 7 and 8% at the best. So when you've only got a 1.6% increase in the overall average selling price, Bellway is absorbing some of that downside. Reservation rate down by a whopping 31.7%. This is where the stock is trading, or will trade at the start today, at 20.50 after gains yesterday. This doesn't look like a particularly encouraging report out this morning, despite we saw record revenues. Elevated mortgage rates, of course, particularly during the autumn and the Help to Buy end of the Help to Buy scheme, contributing to a 43.8% drop in the private reservation rate. Underlying operating margins as well, down from 18.7% to 17.6%. Now, the board has approved a return of surplus cash of £100 million to shareholders to be implemented through a share buyback program, 50 million of which comes today. That's the only real sort of bright spot I can see that might give a little bit of support to these shares. Otherwise, I can quite clearly see this line of support being attacked at 1966. 2050 is where we're coming in today. Now, if I've got that wrong, and you're trading on a short here, you want to put your stop really tight in over the top of yesterday's candle. So I'd probably put it just above the 200-day moving average at around about, what, 2070 or so. 2050 is where we're trading at the moment. That's if you're short on this. And I think this is a company which, despite all best efforts in what is a very tough market, is finding the going tough. And I don't think these numbers are necessarily going to see any party in the boardroom at Bellway. Now, let's take a look at what's happening in the retail sector. Ocado, this is one of the stocks I was watching for this week, and I was a little bit negative on the outlook, but I can't see too much of that in today's trade. Remember, Ocado posted that whopping great big record loss in the full year at the back end of last year. This is a trading update this morning. Let's take a look at the numbers. Retail revenue rising 3.4% to £584 million in Q1. Average orders per week rising 3.6%. Average basket value flat. At the end of the first quarter, the number of active customers reached 951,000, up 13.8% in February. Let's just drill down in those numbers. Average orders per week up 3.6%. Now, that would have been great had the average basket value risen. The problem is that this is a company where if it's having average orders rising, it's having to increase costs by taking that little green van you can see there around to more people's places. So it's actually expending money on taking its goods round to other people's houses. What it really wanted to see was the average basket value rise in line with those average orders. But the company says no change in guidance issued that it issued back on the 28th of February. I want to show you a share price chart for Ocado Group. And as I was saying, this under all sorts of pressure. Just rewind this chart going back to this blue box on the far left-hand side, taking up to a record high during COVID lockdown. Since then, we've seen this pullback. And indeed, I can see possibly this red line, this red dotted line here, which is the lowest that we had down at 380 pence, would seem to be, at the moment at least, some sort of an attractive line to go for. Technically, 451.5 pence is where that stock will open this morning. Let's move on and take a look at another chart worth looking at this morning. The soft drinks company AJ Bar will open today at 543 pence. You can see a long-legged doji candle there. It ended towards the top end of that yesterday. It reported an adjusted pre-tax profit of £43.5 million this morning, up 13.3%. Revenue up 18.2% as well. The group talks about strong performance across its soft drinks portfolio, but says there are many headwinds remaining. UK inflation is one of them, and of course is the main one as well. UK soft drink market saw its value increase 8.8% and volumes falling 2.2%. So there are some serious headwinds at AJ Bar, which might give a little bit of a downside to numbers. But broadly speaking, I think on the whole, the company seems to be doing the best it can given the situation. Walgreens Boots Alliance is due to report earnings in New York before the opening bell this morning. It's earnings for the second quarter, but that may not be the headline. Analysts expecting earnings of $1.10 per share on revenues of just over $33.5 billion. But I think more than these figures, it's all about Boots the Chemist. Investors want to know more about the future of Boots. Some of them, as well as some WBA board members, want the group to prioritize the US market and move away from traditional retail to focus on US private healthcare. Now, this would mean either a spin-off or sale of Boots the Chemist. Now, it did try and sell this last January, last year. This is the direction of travel for this stock. It'll open at $32.94. It's not an all-session stock, so you won't get a bid on this as it reports those numbers. But it certainly will be interesting to see just what happens with Boots. Is this the opportunity the company now has to get rid of Boots? It's not the first time it's wanted to part with its UK operations. It tried to sell it for the first time in January last year, but the price tag was then £7 billion. But Walgreens Boots Alliance didn't find a buyer and decided to call it off 5 months later. What will it do? We could well hear this morning before the US bell at 2:30 this afternoon UK time. Tonight, after the close of Wall Street, we get an all-session stock reporting earnings, which could be interesting. It is the chip company Micron Technology. It's poised to post a loss of 66 pence per share. Revenue expected to continue declining to $3.75 billion. 3 months ago, sales fell 41%, just over $4 billion. So it's on this downward trajectory. As I said, it's an all-session stock on the IG platform, so you'll be able to take a tilt at this in the markets after the close. It'll open at 9 o'clock this morning UK time at 60.08. That's $60.08 a share. Look at the pressure the stock has been under. The semiconductor industry generally still suffering from distortion originating from the COVID-19 pandemic. Orders soaring during 2020 and 2021 to supply a technology boom, pushing Micron and other chip makers to produce more. Now, in the context of fears of a recession, they're left with excess inventories and are forced to wind down their capital investment budget. Micron Technology is reporting after the bell this evening on this Tuesday, 28th of March. Take a look at what's happening in other areas of the market. I want to take a look at what's going on with oil prices. Good day yesterday for the price of oil. We're once again back on this idea that China is likely to see some increased demand this year. You can see the candle that we saw. This is Brent, taking us up to 77.59, which is pretty much where we are at the moment, or that is the price at the moment, but just off yesterday's highs. This is the fastest rate of gain in 4 months due to a conjunction of news. The acquisition of SBV by First Citizens Bank, triggering a wave of optimism across asset classes. Also, according to an annual forecast by a research unit of China National Petroleum, China's crude oil imports are expected to rise 6.2% this year as the Chinese economy, the world's second largest, continues on its road to recovery. Just other areas of the market. Remember, I talked about the second day in a row of losses for the dollar. It doesn't seem to have done anything for the price of gold. Third day in a row of losses at the moment at 1954. At the moment, this is just a retracement. The big move that we've seen up, this rise of 11.36% from the lows we had back on the 28th of February to that spike higher to records not seen, to levels not seen since the push to record highs we saw a couple of years ago, 2010. Currently trading at 1954, just a small pullback in what is otherwise a longer-term upward trajectory for the price of gold. New York cocoa rally continues apace, and it is now hitting 3-year highs. This is partly due to tight supplies from Ivory Coast, the world's largest producer of cocoa, where port arrivals have been running behind last year's rate of increase. I want to show you what's going on in the chart. You can see in the last couple of days, it's risen past this previous line of resistance at 28.55. Very strong day yesterday, ending at 28.80, taking us up there to levels, as I said, not seen since February 2020. However, that rally may not last, as there's no production issue overall in the news. Ivory Coast expects a good mid-crop this year, and its neighbour, the world's second largest producer, Ghana, is poised to produce a larger crop this season. So we could well see somewhat of an unwinding of the recent rise that we've seen in the price of New York cocoa. That's it. I'm going to leave you there, looking out to take a look at what's happening at the start of the day's trade with the likes of Ocado and Bellway, two stocks to watch at the start of the day's European session. But otherwise, look out for that number out from Walgreens Boots Alliance this morning. Could we see Boots come back to the UK as a listing again, once again, in the London markets? Well, that may not necessarily happen, but it certainly could well be that Walgreens might want to shed that part of its business, according to analysts. Looking out for that news before the US markets get underway. We're back at 10:30 with Chart in the Markets. Hope you can join us then on the IG platform.